Hey, what's up, everybody? This is Keith from Stock Market Exclusive. I haven't uploaded a video in a while on YouTube, so I figured this would be a great opportunity to continue doing that, get started doing that again. The market's been a little slow, as we all know, as of early 2022. And later part of 21 as well. It's been pretty dead out there. But there's still opportunities to get involved, plenty of little trades here and there. So I wanted to just basically go over my complete strategy for the most part, to share with you guys how I basically analyze basically my system. I'm going to go over my system with you and how I trade. So some key points that I wanted to go over is, I think having, just because my system works for me does not mean it's going to work. If you follow my rules to a T, yeah, it'll work for you. But the thing is a lot of times how a certain person trades doesn't resonate with an individual. And, for instance, someone may have a certain strategy and it makes total sense to them. And someone else may have another strategy and it makes total sense to them, but it doesn't make total sense to them, the other person. So, for instance, say you have a certain, guru out there, or guru, whatever they call them these days, selling a certain system, selling a certain setup. Well, he may not resonate with another guru that's selling a certain setup, so it's all basically what resonates with you and how you trade and what makes sense to you. And just because my system makes sense to me may not mean it makes sense to you. But you can take things from my system and combine it with other things you've learned and create your own system. That's the beauty of trading, is there's no right or wrong way to trade. So anyway, wanted to get that mumbo jumbo out the way. And so let's go ahead and get right into it. I'm not going to break down every single little detail of my system because I don't want to give away too much, but I'm going to give some really good advice points that you can use for that's basically universal, pretty much any stock, really. It doesn't really matter the float, institutional holding, none of that stuff really matters, because it's hard to explain, but you'll see, because it's dependent on gaps in support and resistance, basically. And every stock has the basic support and resistance theory behind it. So, kind of basically, you want to narrow it down for what you like to trade is what it comes down to. And me personally, I like to trade stocks like under $20 and more lower float, sub 200 million, just because it helps to narrow things down a little bit more, give me more focus. That's another thing too, is that you don't want to have your scanners going off with, a bunch of stocks and you getting lost and you're missing setups, because that's another thing that happens too, is if your criteria is too broad, then you're going to get too much of a spit out and you're not going to have enough of the setups, enough of stocks that you like to trade. So it's a good thing to narrow things down, have certain criteria. So for me, I use under sub 200 million, but that's pretty much for the most part it. Anyway, I'll go ahead and jump into it. Let me see if I can pull up something that's gave a little move here. It's been super dead, but let me just. All right, so we got KAVL, KAVL pulled up. This stock has been uptrending since the beginning of February here. And I just wanted to kind of go through and show you how I plot out my support and resistance, and how basically I interpret, what I see and how my process is a little bit with you guys. So let's see. We're going back here to the initial breakout day. Okay. So that was right here. This was the initial breakout day. You can see this big green daily candle here. This is the daily chart, and this is a 5-minute chart. So you can see that you see this big green candle. What's that indicate? That indicates that buyers are interested, right? People are buying the stock. So match that with volume, right? Matching that with volume here, you see volume basically means the shares that were traded that day, and it was quite a bit of shares, 55 million, nothing crazy, but quite a bit of shares traded that day. So that tells me that people are interested. People are buying the stock. I don't need to know why. I don't care why. The only thing I need to get worried about is seeing the volume and the big green day that people were buying the stock. So what I do is I keep an eye on the stock now. So basically, I'm going to put it on a watch list and keep an eye on this stock. Okay, for tomorrow or the next day. Okay, so let's go ahead and fast forward. So here's the next day, right? Going in, so having it on watch. Here's the next day, and this is basically a nice inside consolidation day. Okay, you can see big move up, and then here's after hours activity, and then it's just going sideways, chopping around. So it didn't really do much that day. So at this point, I have enough data now that I have entry signals. I have support and resistance set up. I have now that I have 2 days of history. So how I plot my support and resistance is so simple. I'm basically just plotting the opening, closing, lows, and highs of each daily candle. So what I'm going to do now is I'm going to plot out the opening price or the closing price, opening price of today, and then the low of today, and then the high of today. And then I'm also going to plot out the yesterday's too. So yesterday's close price and yesterday's high. So now I have levels plotted out. I'm going to go to now what I'm going to look for at this point is I'm going to look for the stock to either give me a good opportunity to buy at support here or buy the breakout of resistance, right? Because that's all this is, support, resistance. These lines are support and resistance lines. So let's go ahead and see what happens on day 3 of, boom, big breakout day. So fast forward to day 3, you can see right here is you can see these levels, how they came into play. So we basically were on day 3, we were in after hours of day 2, we were bumping our head against the closing price. It was acting as resistance. So resistance, tried to break it, you can see tried to break it, tried again, and then it finally broke out. So you can see that once it broke out here, what happened? It went right to the next resistance level and then pulled back, right? So this could have been a good dip buy opportunity right here, because we see that this level is holding up very strong as resistance. So if it's holding that strong as resistance, then it probably is going to hold pretty well as support. And then you can see basically dip buyers popped in and it popped the stock up and broke out of this green level and then hit this next green level here. You see that? And then we came back down, couldn't hold, didn't quite go down to the next resistance or support level, but it chopped around underneath this resistance level here. So once it broke out again, bumped its head again, and then pulled back right to some moving averages here, and volume weighted average price held there. And then once it consolidated there a little bit, because it looks like it was a little bit too extended here, once it consolidated a little bit, you can see that once we broke high a day, we basically filled this gap right here, filled this little spot between two levels, and that's what you're looking for. You're looking for the risk to reward to make sense because you have your targets. You know the stock's going to probably go and bump its head on the next resistance level. And so when you buy the breakout, you know where the stock's supposed to go, and that could be your target point. So if that's your target, then you know the risk reward needs to make sense. So if you're risking the 17s for the 23s, that's 6 cents. So now you know you got to make at least 12 cents for it to make sense. Is this 12 cents gap? You got to figure that out. 23 to 33, that's 10, and then 2 more. So yeah, it looks like it's about exactly 2R. So you'd be buying this break here, risking here, and then you'd be selling here at resistance, knowing that it should break there. That's where your target's going to be. Obviously, things like this happen where it breaks right through that target into the next levels. And in order to find the next levels, you got to go back in history because you can see that there's nothing to the left there on the daily chart. So you got to go back in time to this day here. That's where your next levels are going to be, the 29th. So you can plot that, and then you can start plotting these levels here as you go up. And you can see how the stock reacts to these levels, especially if I break it down to a 1-minute chart that day. And if you can see it better too, what I was talking about earlier, how it broke out and then held up around this level here, and then came right back up into that next level, consolidated, and then broke out, right? And you can see that it wasn't finished here. It came up, rested a little bit, and continued to go until it tested that level. And then now we got all these levels plotted in here, and it's just chopping around between these levels up in here. You can see it's like pretty much respecting these levels to a T. Tries to break, finds resistance, comes down, finds support, breaks, finds resistance again, then it slams down right to that level, and then it's lower high, kind of downtrend, and then boom, found some support probably off this previous little level here, which it's it's going to chop. Usually, sometimes what happens is it chops right back down to that next level, but obviously it's holding here. So you can see now it's breaking through that level again, trying to break back up, now test this next level up here, comes back down to this level, tries to break, can't do it, comes underneath, holds as resistance now, and then now we chop below it. But then look, you can see the level still holds. I mean, these levels are still respecting. So it's holding as resistance, VWAP's coming into play a little bit, now it's finding support at the VWAP, and then you can see how it just reacts completely in line with all of these levels. And how is this going to benefit you as a trader? That's the question, right? What are these levels going to tell you? Well, like I said, it is so these levels are plotted and they're holding, then you're buying at support, selling at resistance, or you're looking for little spots to buy breakouts to the next level that make sense risk reward wise. So there's really nothing in here that you can really do for as far as like proper risk to reward breakouts, because it's like these levels are too close together. Basically, you're looking for big gaps in levels like back here. So you can see this big gap, in the levels right here was a spot to where the risk reward makes sense, right? This gap. But up in here, there's really no opportunity because it's just you don't know if it's there's nowhere to play a gap basically. And then we can plot, even going back to the daily, we're going to plot some more levels because it's going higher. And then, so we just go back in time and plot our levels out, and it'll show us what to do. And then, so here you go. You can see it's perfectly holding to these daily levels. And yeah, so you can come back down, and then up in here is when it really starts picking up, and it just starts completely breaking through all these levels. But you can see right here, kind of consolidated between these two. And then once it broke into this gap here, it really popped off and then tried to go up even higher, but then it bumped its head on these levels up here, came back down, support, and then a big dump. And then, yeah, it kind of just trailed off the rest of the day. Okay, so now we're going to start over. So now that we have another kind of setup here, we're going to plot our levels. So now So now the end of the day, we're looking like this, right? So we can now we're on day what is that, like 5 or something? So now we have now we have a daily chart that looks like this. So now we're going to plot our levels, right? So we have our levels plotted going into the next day, and we're going to also plot. We're also going to plot, this level up here and this level here. See where else. Okay, so that's probably good for now. And it's going to try and get into this gap here, but I like to actually let's see how far back we can go. So I like to pull levels. I don't like to play gaps. I like to pull levels from as far back as you can. So we can play for this gap here. We can plot the lows here, and then it looks like that. So it looks like it's good. Maybe this level here. Okay, so now we have our levels. Now let's see what happens coming into now our daily chart, basically coming into another breakout day, uptrend day. And you can see, look at this perfect setup right here. So when we're coming into today, all we had was these levels. That's it. We don't know what the stock's going to do. All we have is our levels plotted correctly, all the opening prices of the previous day, and the high, and basically the levels up here corresponding. So what we see is in the pre-market, we see the stock bumping its head on this level here. Now look at this big gap right here in space, right? That's quite a big gap. So if that risk reward looks like it's going to make sense. So if we go up to break this level here, we know the stock's probably going to go to the 79s. That's the next resistance level. So that makes sense risk reward wise. And look at that. Right out the gates, breaks that level. Also is the pre-market high, but it's most importantly it's the level previous day's high, and it just breaks immediately and just goes right to the next level. And it even breaks that level, goes and tests that next level before pulling back. So if you're risking the 12s here for the 27s, this is a huge risk reward trade. I mean, you only need one of these a day. And I mean, what I do personally is when I see a gap like this, I know if it should fill, I mean, there's no reason to take profits until we get to our target in reality. And that's a very high R trade. So if you're patient enough and you can wait for these big gaps in space and play them, that's the biggest risk reward opportunities you're going to get. So you buy here and you sell here, risking here, the low of support. And so me personally, I like I said, I start selling at 2R and I'll sell pieces, each R up. Sometimes I'll hold, but most of the time that's how I do it, because even though it should go here, you always want to scale out because you never know. There's a lot of false breakouts, especially in this market. So we can see it breaks out, comes up, tests that level, and then that level holds basically the whole day. So yeah, you can see how it's just bumping its head on that level the whole day. And then it just sells off, fills that gap back down to the downside, breaks below it, tries to go down to this level, but it doesn't hold, and then, yeah. So, pretty cool stuff. That's basically a breakdown of how I plot my levels and how I use my system. And basically, look at it, you can see here, it broke out here on this day here, and it's like you can just ride this up, keep riding it up. It's like, why not? You know, if this right here gave you a proper signal, you could have played this gap here. You know, it's supposed to go up to here, and look how far it came. It came almost up to there and broke. So, and it perfectly consolidated right below this level here at 97. So you could got the 97s risking what, 82s, and yeah, I mean, look at that risk reward. That's massive. That big gap right there that's filling. So anyway, guys, that's basically my system in a nutshell. Basically that's how I do it. And if you like this video, go ahead and like and comment, whatever, any questions, and subscribe, help the channel out. And yeah, I hope you guys enjoyed the video. If you have any questions, like I said, go ahead and leave them below.